It's September 21st, 2015. This is Ron Feinstein, New Wave Forecasting, coming to you from Chicago, the home of the futures markets. You can follow me on Twitter, at Ron Feinstein. I'm going to talk a little bit about Apple Computer today. You know, sometimes there are forecasts that we can make with relatively detailed specificity, and then sometimes we have to talk in much more vagaries, big picture, so to speak. I put out a forecast on August 17th for Apple, and I'd been put out a couple along the way, and that stock was trading about 117, and I suggested that if the stock could hold for 2 days, we could have a quick run up to towards 125 to test at the time, which remains an unfilled gap. I also specifically stressed how important those next 2 days of trade were going to be, and if prices fell back below 115.50, there would be a quick shot or a good shot for a test of 104, which had been previously one of my previous targets. And sure enough, 2 days later, the market fell apart into we saw what I like to call the Shanghai surprise, decimation. The stock dropped all the way to $92, which represented about a 35% correction from the high at 132. Now, I am presenting a bullish case for Apple Computer. There's a number of assumptions that have gone into this particular scenario. And again, I do not know that Apple has not seen the all-time high. But I'm working off the assumption, at least as of today, that we're going up higher, and I'm looking for a possibility of a move towards 140 to 142 into January. One of the things I've practiced throughout the decades when it comes to looking at retracements is that by and large the market shouldn't go back further than the fourth wave of the extended third wave, and if that is where this presumed wave 4 correction in Apple did conclude, I can fill in the blanks and come up with what I believe to be the best count. It did not turn out to be the count that I envisioned it originally, but I do believe it is the best count. And what really matters more than how we count the drive to the high is how we count the setback subsequent. It's my opinion that we are probably looking at a triple zigzag move that left from the absolute orthodox high to the low. There are a couple problems with this chart. Whenever we see multiple tests of the same price level, in this case we had 4 shots at 132. Specifically when it comes to wave counting, it could be a very long time before we know which one of these really represents perhaps the top of 5 of something. But again, working off of what I have here, I think we can make a strong case that this was a triple zigzag decline and that it simply ended with some kind of a massive downside blowout on that critical Monday. Now, the bears are going to say, hey, look, this is a broadening top, or this is a head and shoulders top, or it's a rectangle top, and I don't care what anybody says. I'm going to sell this stock on a test of 120. Now, you know, that's probably not an unreasonable attitude to hold at this point in time. I'm going to argue, however, if Apple is bullish, that what we are looking at here is the development of a head and shoulders bottom, and that we are currently working on what I would consider to be the right armpit. And ideally, prices will just go sideways here for, I don't know, 4 to 9 sessions and just not give up much. You know, as long as we can hold somewhere just below 110, I'm willing to be open and allow for a washout of 110, a bear trap before the market turns up. But I really don't want to see the market trade below 108. I think if that happens, then, I could ultimately be right, but it could hurt a lot before that happens. And believe me, I am by no means suggesting everybody be long Apple right here. This is a very tough count. It's a very tough trade. I think the tipping point for all intents and purposes probably is 120. I don't know that if it got much above there, the sellers could hold in. So the big problem, of course, is we don't know and may never know how many people really wound up selling below 104, 102 into what was which I'm hoping will ultimately be one of the biggest bear traps in modern history, certainly for this stock. There's an open gap up here in the 126, 129 vicinity. Be happy to come back and revisit that in the event prices actually get there. It'd be kind of interesting if they do. So we'll see. It's a very tough situation here. Ideally, I'd like to see the market just go sideways. Don't have as I said, don't have a tremendous amount of specificity here, but I think we do have two things that we may not have had, that we might not have elsewhere, and that is both time and reasonable metrics for both price action and behavior. So again, lots to be seen here. Will this turn out to be the beginning of a new leg up to all-time highs for Apple? That's what I'm hoping. We'll just have to see. Again, this is Ron Feinstein, New Way Forecasting Ltd., September 21st, 2015. Apple forecast here, prepared special for marketstoday.net.